Today's highlights. On the first day of the new year, Bitcoin is still stuck in a range, but Ethereum is stubbornly resisting downward price pressure. 2025 in the crypto world was boring and disappointing. So, will 2026 be a key turning point for the crypto market? It's Thursday, January 1st. This is the Chinese channel of BitcoinTV. Where is Point B? Today is the first day of 2026. 2025 is behind us, and I don't miss it at all. But for 2026, we still wish everyone can seize the opportunities this year and ride the A8, A9 trend. All right, let's look at the most important must-catch 24-hour data summary for 2026. Bitcoin still hasn't entered a clear one-sided trend yet. On the surface, things seem lively, but in reality, it's being pulled in three directions at once: macro liquidity, market sentiment, and these combined forces. Everyone sees ETFs as a kind of safety net at the bottom, preventing Bitcoin from falling too hard. But the Federal Reserve's stance and the hesitation of capital are also keeping the market from rallying. So that's why it's stuck at this 88,000 level, neither going up nor down. Right now, it's like a tug-of-war. In all likelihood, Bitcoin will continue to fluctuate and struggle between 80,000 and 140,000, with the main battleground for fierce competition being between 90,000 and 120,000. But as soon as liquidity picks up and ETF funds start pouring in real money, the market is very likely to test the 120,000 level or even higher. So the key issue isn't whether we should rush in right now, but rather that we should keep an eye on the signals that could change the situation. First, is there a steady inflow of funds? Second, is leverage quietly increasing? Third, are long-term holders starting to let go? That's why our headlines keep an eye on these signals for you every day. Before these signals appear, the market is most likely still holding back for a big move rather than getting ready to take off. In other words, what matters now isn't guts, but patience. Recently, our audience has been growing fast. We let new viewers know. If you watch only our daily headlines, just 4 or 5 minutes gives you a picture of what's happened in the crypto world in the last 24 hours. Institutional trading volume has cooled noticeably. The 7-day average is down to only $36 million, a far cry from November's lively scenes, easily hitting $140 million. Everyone's on the sidelines watching for the first move. The money in the market isn't leaving, but no new capital enters. As a result, the market is stuck in limbo, unmoving. With lower trading volume, prices become susceptible to being swayed by a few large trades. Many people are watching from the sidelines, but no one has clear direction. To put it plainly, the market right now comes down to 3 words: waiting for people, waiting for new money, waiting for new stories, waiting for a new direction. As long as capital doesn't flow back in and new funds don't push up the price, Bitcoin will most likely continue to hover between 80,000 and 90,000. After drifting around for a while, if there's really going to be a trend reversal, it will have to wait for volume to wake up first. And during this period of consolidation, the most common thing happening is testing support, and it's mostly testing downward. Now let's look at Ethereum. It's a bit like someone is constantly pushing its head down every day, but no matter what, it just won't go down. Looking at the data, Ethereum's taker value has been negative for 30 days straight. What does this indicate? Every day in the futures market, people are short selling and their voices are very loud. Despite this, the price should have collapsed, but what's the reality? Ethereum is stubbornly holding its ground around $3,000. This shows that while there's a lot of arguing in the futures market, the spot market is silently absorbing all the selling. The shorts stir emotions, but it's the longs who back things and take positions. What you see on charts looks fierce with intense competition, but someone quietly supports the market. So right now, Ethereum isn't collapsing. Arguments are heated, but it hasn't become an all-out fight. As long as the spot market can steadily absorb this selling pressure, no matter how much the futures market tries to stir things up, it will be very difficult to truly push down the price of Ethereum. To put it simply, Ethereum is experiencing a drop in sentiment, but the price still hasn't given in. Alright, recently our fan base has been growing very quickly, so for those of you tuning into our channel for the first time, we want you to know that we help you sort through Web3 news every day. We also hope you'll turn on the notification bell. Why should you take the time out of your busy day to turn on the bell? Even if you don't have time to watch the whole video, just glancing at the title will give you a general idea of what's happened in the crypto world over the past 24 hours. It's a smart and efficient way to stay updated. Of course, we also hope you'll consider joining our membership. Today is Thursday, and we'll be having an exclusive live stream for members. We break down and analyze the issues you care about, chew them over, and then tell you where the real wealth secrets lie. All right, after the headlines, it's time for our news highlights. Today's top story is still about the price of Bitcoin. As you all know, gold and silver have been rising for at least the past 6 months, but Bitcoin, not only has it not moved, it's actually slipped downward, as if it's stuck at the psychological barrier of $90,000, unwilling to break through, but also unable to fall further. So what is the market afraid of right now? It's afraid that the Federal Reserve might suddenly turn hawkish. A single word from Powell could make all the capital slam on the brakes. It's not that institutions aren't optimistic about Bitcoin, they're just afraid that those who get in early might get hurt first. The current atmosphere in the Bitcoin or crypto market is like the stifling heat before a storm. Everyone knows it's going to rain, but no one knows exactly when.
Since 2025, the US dollar index has cumulatively fallen by nearly 10%, marking the largest annual decline since 2017. The market generally believes that this trend is closely related to renewed expectations of Federal Reserve rate cuts. According to CME FedWatch data, the market currently expects there is over an 80% chance that the Fed will keep rates unchanged at the January meeting. However, other forecasting models still believe that the likelihood of another rate cut within the year remains relatively high.
As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate.
Monetary policy and US political factors are also influencing market sentiment. Mark Sobel, former US Treasury official and current chair of OMFIF, pointed out that while the impact of political variables on the international status of the dollar is a long-term process, it has already begun to have a substantial effect on market expectations.
As everyone knows, after Trump took office in 2025, he introduced a number of stablecoin bills, anti-CBDC bills, and other policies that were particularly favorable to the crypto industry. However, he has continuously attacked the Federal Reserve, repeatedly launched tariff wars, constantly pressured Europe to withdraw troops, and persistently suppressed Ukraine. All these actions will weaken the US dollar and undermine the US-led system that the world has believed in for 80 years, causing both the dollar and US military influence to keep declining. A continued decline in the US dollar index is something we should expect to see in the coming years, especially with the Federal Reserve's interest rate cut expectations constantly fluctuating, right? The Federal Reserve's ability to stabilize the US capital pool through short-term treasury bonds is also weakening. So I look at all these major events together. What is the core signal here? The Federal Reserve will shift from proactive tightening to a phase of passive stabilization, at least until next May. Right now, it's January, so that's less than half a year away. What does this mean? It means that monetary policy, especially US dollar monetary policy, will have a diminishing marginal impact on the crypto space, while fiscal policy, politics, and credit variables will begin to have a significant influence on crypto, even shaping expectations within the crypto market. So remember, in 2020, the era of making quick money purely on sentiment is over. The days when you could just write a PPT, tell a story, and cash in, I believe the era of memes is coming to an end. Then what about 2026? That will be the year when making money relies on your understanding before the trend takes off. So how do you gain insight into the crypto space? Many people say our program is too macro and doesn't talk about specifics. But do I really need to discuss specifics? Just open Twitter. Everyone is watching Solana today, Binance tomorrow, Asta today, and who knows which project will be hyped tomorrow. If you tally up your trades, after jumping from one sector to another throughout 2025, did you actually make any money in the end? That's why our daily report focuses on the macro perspective every day, stuffing that understanding into your mind. How do you truly grasp the industry? It's not about getting lost in the details every day. You need to step back and see the bigger picture. Only by being above it all can you achieve high quality. So, looking back at 2025, more than 82% of new coins dropped below their listing price right after launch. So if you're still chasing concepts and searching for the secret to wealth in different sectors, that approach just won't work in 2026. It could be disastrous.
On-chain data shows that newly issued tokens in 2025 performed poorly overall. Throughout the year, around 117 projects were launched, with about 85% of them seeing their market value fall below the median issue price, with declines as steep as 71%. Around 40% of projects dropped by more than 80%. Overall, the total value of new coins has shrunk from about $139 billion to $54 billion, wiping out nearly 60%. This isn't just a short-term sentiment swing. It's a systemic clearing out after sustained capital outflows and a liquidity crunch.
So in 2025, you'll still see some people making money by taking chances or betting on the right direction, but by 2026, such cases should be very rare. So how can we judge the trend and anticipate what 2026 will look like? In today's members-only livestream, we'll summarize the top 10 tokens you absolutely must hold over the next 4 years, or specifically for 2026. We'll look at this from the perspective of trends, the market's real needs, and the overall macro environment. So which tokens are truly essential to have? Members with silver or higher status can watch the exclusive livestream on Thursday, but today we'll clearly explain the top 10 for everyone. Lankier is about to give away money. Some people are locking up their tokens, others are cashing out. 1.34 billion worth of NFTs are piling up, but no one is buying. The world of crypto is truly a tale of two extremes. Newcomers to the crypto world and even many seasoned industry OGs often make the same mistake. They try to predict the future based on the present. Now I say, oh, if only I had known, I would have started mining back in 2010, right? Or back when it hit 69,000, that was the peak. Why didn't you sell all your coins then? Looking back from today, you can always tell which points were highs and which were lows. But looking forward from now, can you tell me if the price will go up or down tomorrow? What will be the high and low next week? Making decisions about the future from where we stand now is what's truly difficult. Looking back from today, I already know the right answers. If you had told me back then, I would have started mining with Satoshi Nakamoto as soon as he released the white paper in 2009, and I would have held on to all my coins. How great would that have been? You'll hear this kind of narrative in all sorts of groups, AMAs, and spaces. I categorize all of these as retail investor talk. People who think like this are destined not to make money. Only by setting strategies now that you must follow in the future can you survive in the crypto world. And in the crypto space, there is a track where you can actually earn real assets and real results without needing to make predictions. You don't need to slap your thigh in regret. Do you still remember the $6.4 billion airdrop from Uniswap back in the day? Now, here comes Ledger with $675 million prepared for a massive airdrop. In short, it's aiming to become legendary during the bear market, and we hope to see more projects like this.
So Lighter's built on top of Ethereum, I think the most important things about it are, low cost, low latency, security, verifiability, and composability.
After its launch, the market quickly polarized. On one hand, on-chain data shows $30 million claimed. LIT has been claimed, with early participants cashing out. On the other hand, 75% of addresses chose to hold or buy more, indicating investor confidence in the project's prospects. However, controversy has also grown as the team and investors together hold as much as 50% of the token allocation. Even though there is a vesting period, many people still question whether this concentration is excessive, raising doubts about the project's decentralization and long-term fairness.
In a bear market, when there's large-scale token giveaway, we must be cautious. But we shouldn't encourage chasing airdrops as often, considering token distribution and economic model. If they hold more than 50%, even with a vesting period, the tokens are still relatively concentrated. So, is this area really decentralized or is it still centralized? How should this power be balanced? This is indeed a problem that every so-called app in the crypto space needs to solve. All right, let's do a poll. How many people here own an NFT? If you own at least one NFT, please type NFT in our comment section, okay? When it comes to NFTs now, there's really just one word: too many. The market has one key issue. There are just too many projects, too many investment options. How many exactly? By 2025, the total number of NFTs will reach 1.34 billion, which is 30% more than in 2024 and dozens of times more than in 2021. In the past, everyone was scrambling to buy, but now people can't keep up with buying because there are simply too many options. The problem is the number of buyers, the market hasn't grown accordingly. There are more and more tools, is decreasing, and the barriers to entry are getting lower and lower. Now, anyone can mint NFTs at a very low cost, but the number of people truly willing to put down real money to buy in at the bottom is getting smaller and smaller. So what's the conclusion? The shelves are full, but the wallets are empty. The market no longer lacks narratives or concepts. What it lacks are truly valuable assets that can stand the test of time. New NFTs have gone from being able to rise in value no matter how casually they're released to now facing the question, why should I buy yours? This is the most honest reality of NFTs today.
In 2025, the NFT market's total annual trading volume is about $5.63 billion, a 37% decrease from $8.9 billion in 2024. The average transaction price dropped from $124 to $96, falling below the $100 mark for the first time. Compared to the peak period from 2021 to 2022, when the average price was around $400, there has been a significant decrease.
But nobody, not even the inner circle of NFT collectors, could believe it, because the reputation of NFTs has faded so much and is now so low.
NFTs dropped from its 2022 peak of $17 billion to $9.2 billion early 2025, then to $2.4 billion later that year. The market now sees high issuances, weak trading, low prices. Liquidity is dispersed, demand insufficient, and the market is deflationary.
The Wall Street Journal said in the spring and summer of 2000 that the internet was just a fad. Because Amazon, eBay, PayPal, their stocks dropped from $150 to $4, $3 because of the collapse. What happened in Web 1.0 and what happened in Web 3.0 with NFTs was the same thing. Greed took over the macro environment.
When NFT prices were skyrocketing, everyone saw them as a status symbol, as something that could be speculated on for value. Now that prices have dropped, people have started to ask, can they actually be used as money? Can they serve as a long-term tool? Will it protect my rights? On our channel, our own NFTs are our badges. These badges represent the highest level of profit-sharing rights in the channel, with a maximum share of up to 50% of the channel's profits. The total number of badges is capped at 21 million. There is an initial threshold to obtain a badge. You must first become a member and be able to view the members-only live badge before you are eligible to own one. All right, let's look at the news update.
This incident has taught the crypto community another lesson. Previously, many people blamed Mark Cuban, saying he endorsed the already collapsed Voyager Digital and caused everyone to lose money. But the court simply stated that there was insufficient evidence. The case was dismissed, and this round of capital was not found guilty, but the market has been reminded once again. Instead of relying on informants, it's better to understand the rules clearly. The 6 major banks have officially announced that as long as you deposit money in a Type Y wallet, it will be treated as a demand deposit, and the interest rate is about the same as putting it in a bank. But be aware, if you are using a Type RV wallet, it can only be used as an e-wallet. Don't expect it to earn you interest. It can't help you make money. Scammers have really gotten creative lately. They impersonate state-owned enterprises, fake banks, and fake platforms, each one more convincing than the last. The National Cyberspace Administration recently investigated and uncovered over 1,400 fake websites. Some pretend to sell stores, some pretend to sell oil, and others even pose as banks to lure you into buying stablecoins. It looks like financial management, but in reality, it's all a trap. AID has hit the pause button again because the NKN chain can't keep up. Blocks are being produced slowly, so the platform simply shut down the deposit channel for now. As for when it will be restored, we'll have to wait until the chain recovers on its own. So everyone hold off on making transfers for the time being. The Turkish crypto exchange VTC Truck has been hacked again, and this time it wasn't just any thief. It was a repeat offender. Last year, nearly $50 million was stolen, and this year, another $48 million was taken. The hacker seems to know their way around quite well. For users, this is no longer just a technical issue. It's a question of whether the lock has actually been fixed or not.
All right, in this session, I want to answer a question that many people have asked me. A lot of people say, Michael, I really envy you. You can fly anywhere in the world and work as long as you have internet. Can I be like you? Actually, my life is just a plane ticket. In my 40s, I ended my life as a Beijing drifter, packed 2 suitcases, and moved to a foreign country. Honestly, I felt quite emotional at the time, but then I suddenly realized that I had actually opened the door to a life of freedom. In the past, my understanding of prison came from the high walls, electric fences, and iron gates described in old books like The Shawshank Redemption. It wasn't until later that I realized what truly traps people is never the concrete and steel, but rather the way of life you've grown accustomed to. I asked them, why can't you just buy a plane ticket, hand in your resignation, and leave? There were only 2 answers. I can't let go of things here, and I can't let go of things there. Some say the strongest prison is the daily trivialities you've grown used to and no longer resist. When you're clearly unhappy, not enjoying life, overwhelmed by stress, yet every day you repeat the same routines, say the same things to the same people. Even though you feel suffocated, you still tell yourself, I can endure this. At that moment, your prison has already been formed, so the real prison isn't the one that restricts your movements, but the one that steals your courage to choose. Many people don't lack the key, they've just forgotten that they once had the right to open the door. And when someone stops asking, what do I want? And only asks, how much longer can I hold on? Freedom has already drifted far away from them. If you understand, feel free to give a like. All right, that's all for today's program. Here we've compiled the membership benefits for you. We hope you'll join as a member so we can ride out this bear market together and get even better prices at the bottom. Let's accumulate more and more Bitcoin. See you tomorrow.